A couple of late stragglers coming in. Right, we'll get going. Hello, everyone. Thank you and welcome. My name is Matthew Greenwood, and I'm the Head of Debt and Financial Inclusion at the Centre for Social Justice, a think tank that exists to put social justice at the heart of British politics. And today, we're hosting an event in partnership with Fair for All Finance called Credit Where It's Due, enabling customers to access consumer credit. Now, in terms of sort of proceedings of today, what I'm going to do is I will introduce all of the panel who are here to give us their thoughts, opinions and reflections. And we're first going to have a sort of brief presentation by Opinium. For about 5 minutes, we'll just show you some new polling, new insights that we've been generating to really shine a light on the lack of access to consumer credit, particularly for vulnerable people, which I'm sure many people will talk about in a minute. So I will start with James, and then I'll introduce the panel.
Thank you. Yes. Do you need me to speak into the microphone? Yes, okay, we will do then. So I need to actually get this up. Oh, I see. There we go. So as Matt said, what we wanted to do was really evidence the problem of exclusion from the credit market. So as we tend to do in polling, so with the long-standing partnership that Opinium has with the CSJ, we conducted a large-scale nationally representative sample. The point of this here is not just to evidence a particular problem of exclusion amongst vulnerable customers, vulnerable consumers from the credit market, but also try and demonstrate how particularly problematic this is compared to the wider market as a whole. So you really see the distinction between the wider consumer credit market and some of the most vulnerable customers in it. So to do this, we segmented our large-scale national representative sample of 4,000 adults, and we segmented it by 3 key groups. Now, we're going to focus on all of these, and please forgive me if we have to just go with these shorthands here, because we could do an awful lot better, I'm sure, at naming some of these. But ultimately, we looked at 3 key groups. So subprime, which we classify as the most vulnerable here, but ultimately what we mean by that is those who have the greatest risk of exclusion from the credit market. So that might be that they have CCJs, or they might have been bankrupt previously in the past. Then you have a slightly larger group, about a fifth of the UK population, who are near prime. So those are people who are either new to the credit market, or they might have had problems in the past that are still on their record. And then you have the wider group, which Matt and I struggled with probably the most. Just calling them prime felt like we weren't really doing it justice. But for the purpose of this, you'll have to forgive us, and we'll just talk about the wider credit market that don't have many of those problems. So what we wanted to start with was look at actually what the rates of exclusion were. So how big is this problem? We can almost basically put a number on it. So what we asked was, first, have you been refused credit in the past 2 years at any point? Or alternatively, which is an even bigger problem, have you been dissuaded, put off from applying for credit because you have this fear of refusal, fear of rejection? So as you can see, we've cut that between our 3 groups here, and you can see the huge rates of either refusals, so almost half of subprime consumers being refused credit in the past 2 years, and a large proportion of 60% also saying that they've not applied for credit because they are afraid of being refused access to it and the impact that that might have. So you can see that amongst the most vulnerable segment, this problem is particularly big. And you can see, I guess, compared to the contrast of the wider prime market. So that's why we always like to go for a wider sample and let us drill down, because then you can really compare and see the scale of the challenge and the scale of the problem. Now, when we dig down into that subprime group and we want to see, okay, well, what have they been, what credit have they been unable to access? Yes, there's the mainstream ones that you'd expect, so personal loans, credit cards, is what you'd expect. But there is still, in total, if you look at those different high-cost, short-term products, so things like payday loans, there's a large proportion also who are applying for those and also not getting access to them. So it depends which products you include in that category, but if you actually add them all up together, you get somewhere between a fifth and a quarter of people who have been rejected saying that that was for high cost short-term credit. So even access to that can be problematic for this group. Then very finally, what we really want to do was kind of look at what the outcome of that was. So if you're being rejected, and not able to access these types of credit, what are you going on to do next? What is the kind of outcome from that? And on one hand, you can see those in the kind of the blue prime, far more likely, rather than to say, I had to go and find it from elsewhere, they say that I went without. I just didn't use that credit, either because they had the money somewhere else, or because they just didn't do what they were going to do with it. But if you turn your attention to the pink, you'll find far more that subprime, rather than saying I went without, which is the kind of overall term we've gone with there, we've said that they've actually gone outside of the credit market and they've found that money from somewhere else. And that might be borrowing from friends, it might be borrowing from family, or more worryingly, also borrowing from local unregistered lenders, illegitimate lenders and people like that. So that is also on our kind of list of concerns. And the overall impact of that is just that this isn't an ideal scenario, as you can possibly imagine, for us to be in. So not only especially if you're relying on friends and family, you're actually doing that quite regularly. So this is, if you've actually gone ahead and need to do that, what were kind of features of that borrowing process? What did that look like? Not only were you kind of doing it probably quite regularly, you needed to access it a lot, also you were paying more than you put in, especially for local lenders as well, local unregistered lenders. So it's really saying that this group that is not getting this access to credit is now still needing to get it from somewhere. It's a necessity, and the impact that it has is that they are going into kind of less successful, less ideal forms of credit and borrowing that are going to have longer-term problems. So I hope that meets the definition of a short presentation, Matthew.
Thank you. It's always good to begin on a high note. But thank you, James. And it's really worrying figures there to see, in light of very difficult times and the cost of living for a lot of people, that they are being rejected from accessing consumer credit of some form or another, when we know that in many instances people who cannot access legal credit go on to access illegal credit in the form of illegal money lenders. Something which both Fair for All and the CSJ have been passionate campaigners against and supporting people to be able to access credit. So I will introduce the stars of the show now, and then we will go on to introductory remarks. So on one side, I have David Maddox, the political editor of the Daily Express. I have Baroness Evans of Bowes Park, former leader of the House of Lords. I have Joe Gideon, the MP for Stoke-on-Trent. And I have Sasha Romanovich, the CEO of Fair for All Finance. So why don't we begin with Baroness Evans?
Thank you. Thanks, Matt. And thank you all for coming. This is a really important area, and I think, as we've just heard, some stark figures. And I'm just going to throw a few more at you, which I'm sure you're probably all aware of. The fact that more than 20 million UK adults are financially underserved. A quarter of UK adults have less than £100 in savings, and 1 in 6 have no money put away at all. And more than a quarter of UK adults would struggle to pay an emergency bill. Around 6 million people are credit invisible, meaning that they can apply for a loan but basically would get automatically rejected. And I think Sasha's organisation have shown that the gap in provision for appropriate, fair and affordable credit to people in financially vulnerable circumstances is predicted to rise to at least £3 billion by 2025. So I think between us all, we can show that this is a real area that needs some focus. And the CDFI sector are absolutely critical to helping bridge this gap and helping to offer affordable credit to those people who need it but can afford it. So I'm going to kick off with 5 suggestions of ways in which the sector can be helped in order to help the most vulnerable in our society who need this support. Firstly, better use of technology always is a kind of number one thing, but I'm sure most of you have heard, for instance, of open banking, which allows real analysis of what consumers can afford and offers a way to offer credit to people who may not have it normally. So I currently am doing some work with Salad Money, who are in the CDFI sector and who use open banking. And what they can really do is look at a careful and fair assessment of whether people can actually afford credit. They analyse, for instance, over 1,500 bank transactions for every applicant. And obviously using that kind of data really means that you can drill down into a person's circumstances and understand if they can afford credit. Because what we're talking about here is not throwing it out to people, not putting them into an even more vulnerable situation. It's about allowing people access to what they can afford. And using things like open banking can really help to do that. But what it can also do is mean that by analysing transactions, you can also see where problems are occurring. So one of the really worrying things that I think Salad customers, and maybe Sasha will know more about this as well, is, for instance, the prevalence of gambling. You can see these issues, people then being offered credit by other people who don't use this kind of technology, and perhaps offering credit to people who would then spend it in a reckless manner and get themselves into more issues. So better use of data, I'd certainly say, is something that can help in this area. Obviously, more support and help from mainstream lenders. Lots of people who are customers of CDFIs have accounts with banks but can't get any credit from them. There have been some very welcome initiatives. So, for instance, NatWest and Responsible Finance have partnered up to offer a hardship grant programme, which has given small amounts of money to people who couldn't get loans. So there has been some work in the sector. But to be honest, banks aren't doing enough. Salad, for instance, have had funding from, for instance, Fair for All. But in order to scale up, they've had to go to a US banking facility because they couldn't get commercial capital from UK banks. So there's certainly more that the banking sector can do to support the CDFI sector to grow. Thirdly, better signposting from banks to CDFIs. This is a sector that should be supported. It can offer and move in an area that perhaps mainstream banks don't want to. So better liaison and links between the mainstream banking and CDFIs are important. Next, exempting CDFIs from credit broking requirements. At the moment, the current regulations act as a barrier between CDFIs and other charity organisations working together in order to offer credit. As I'm sure you all know, housing associations and local authorities are exempt from the credit broking regulations, but this should be extended to other organisations that will refer people to CDFIs without charging fees, and that could make a big difference. And finally, perhaps a more radical idea is the idea of a social credit score. So as I've mentioned, there are 6 million credit invisibles, people who do not have a credit rating at the moment. One thing that could happen and could change significantly a lot of people's ability to access affordable credit is by providing a social credit score. So the idea is that the FCA, industry and consumer representatives work together to determine what an appropriate social score would be. If you then apply for credit but you don't have a traditional credit score, you could be given a social credit score. This is not about meaning that people will automatically be provided with credit, but what it means is it's a starting point for people so that they can move into an affordability assessment, and therefore, if you can then afford it, you might be able to access credit. But in a world of new technology, in a world where so much more can be done to look at somebody's individual financial circumstances, there's got to be a better way of bringing people who can afford affordable credit to have it, rather than leaving them outside the system, and as we heard from James, potentially having to go to unscrupulous lenders, which, frankly makes their life a misery. So that's it from me, but those are my 5 suggestions.
Thank you. And I think now we will move on to Sasha.
Brilliant, thank you. And I agree with all of those. That's super. So, just in terms of the research was very much commissioned sort of timely basis. It absolutely backs up all the in-depth research that we've done over the years. And there are over 17.5 million people in the UK in what we call financially vulnerable circumstances. I think it's quite important, the language that we use. Sometimes when we talk about vulnerable people, it can be quite othering. But actually what we know is that actually a life event, a bereavement, a job loss, a relationship breakdown, an illness, a life-changing illness, all of those are things where actually you can suddenly be tipped from being, I'm doing okay, into actually very challenging financially vulnerable circumstances. So I think that's an important thing for all of us to remember. Just in terms of the scale of the issue, just backing up, we did the illegal money lending research, and I think one has to be very thoughtful when one sees friends and family, because anyone who speaks to the illegal money lending team know that actually friends and family is often the slippery slope into illegal money lending. And our qualitative research earlier in the year showed that about 3 million people in the UK have gone to an illegal money lender over the last 3 years. So, you know, the fact that, you know, if people haven't got access to it, the need hasn't gone away. And so I think that's the really important thing, is actually the need hasn't gone away. How do you fulfill that responsibly is the really important question to answer. Now, some people might be sitting there saying, well, people should just jolly well save up. That's what I had to do. And, you know, that in many situations isn't unreasonable. However, I think it's really important to ground ourselves into the realities of people's lives. So I'll use just one example that's a case study that always sticks with me, which is a mother who had an autistic son who was doubly incontinent, and she didn't have a tumble dryer. She had a washing machine, but she didn't have a tumble dryer. So she was often drying his clothes with a hairdryer, and she didn't have lots of clothes. He was being bullied because he smelt. And she was able to get a loan from another CBFI, one of our other investees, which enabled her to get a tumble dryer. And she said, it transformed my life in terms of change. Her second loan let her get a bed, which meant that she wasn't sleeping with her doubly incontinent 8-year-old, which she had been for the previous 8 years. She then was able to actually sleep adequately and actually get into work. The economics of saving up would have meant that it would have taken her 2 years to get to that place. So then the final bit, because I know otherwise I'm going to be getting a kick under the table, is I think that we need to make sure that we've got sort of really 3 things into the system. Yep. We need the breadth of providers who can provide service. And I can see we've got Robert Kelly from ABCUL, and credit unions are a really important part of the landscape. We have community finance organisations like Salad, like Fair For You. We have credit unions. Funding them so that they can scale is really important. Pretty much every other geography around the world has got some kind of mechanism that incentivises banks to actually make sure that funding is provided to those organisations. We actually have the opposite. So it makes it really hard for a bank to say rationally, I'm going to put money into this space. We need to change that. We need to make sure we've got a system that actually really doesn't penalise people for their state, but actually recognises their trait. And open banking can be part of that. We're doing a no interest loan pilot at the moment. And of that, 80% of people who've applied for a no interest loan have got a very poor credit score. And yet at the moment, the arrears rate is in low single digits. So it's not their state that is determining their propensity to pay. And the final bit is product innovation. And I've mentioned no interest loan schemes. We're also looking at consolidation loans. There's loads more that I can say, but I'll shut up for now.
And I completely agree on the friends and family point. I think one of the most harrowing things that came out of all the CSJ's work on this is that over half of people who borrow from an illegal lender say they thought that person was a friend when they first borrowed. And in many instances, they are anything but. And Joe, why don't we go to you?
Yes, thank you. Obviously, I agree with everything that's been said. I'm not going to cover the same ground, but I just wanted to give you a sense of why so you kindly introduced me as the Member of Parliament for Stoke-on-Trent. There are 3 of us. I'm Stoke-on-Trent
Yes.
Central. I need to so a great deal of real need and real poverty in Stoke-on-Trent Central. And there was a survey by the Hardship Commission about the extent to it. I mean, this goes back, the survey was 8 years ago, and even then it said that 42% of adults in Stoke-on-Trent, the city, had less than £100 in savings. 25% of adults have been refused credit in the past 5 years, and 15% of adults have used high-cost, short-term credit provider in the last year. So it's a real issue. And my first instinct was to say, well, why haven't we got a credit union? And the answer was, well, we tried that and it didn't work. It didn't work because management, whatever. But it didn't work, I think, and I was told by somebody who had been very much involved in setting up that credit union, that the challenge is that there aren't enough people who can save in order to lend the money. And so, you know, if you have a state of a large number of people in poverty, there must be a slightly different way of making it work. The terrible thing is, you know, if you are very poor, you are penalised not just by banks, but also by electricity companies. You know, everybody needs to have their electricity, but if you can't afford to pay the bill, you're forced on a prepayment meter. We've now, you know, legislated to make that change, because the cost of living for somebody who can't afford normal living is much higher than the cost of living for people who can afford it, and that's kind of perverse to my mind. I looked at what is currently sort of active in Stoke at the moment, and I came across the largest company that provide doorstep loans, and I looked, and they said, so if you wanted to borrow £400, you'd get a 615% APR on it. And if you managed to pay it back within 39 weeks, you would pay it back at pretty much double the initial loan. So on that basis, you know, if you're poor, you're going to be probably in that cycle of never being able to pay it back. In terms of credit ratings, it will get worse and worse and worse. So, you know, what is the answer? You know, I mean, we have to protect people, tackle loan sharks, and there have to be different financial packages and solutions for different types of customers. You've given a good breakdown of customers, but you know, there'll be people who can't save to borrow for a once in a decade problem. You know, it's the tumble dryer. It's that thing that you know, it's not that they need a large amount of money on a regular basis. It's just that one-off, and there must be an easier way to make sure that they don't go into a permanent state of debt. I've personally been campaigning for community banking, because a lot of people in that, probably it would be the prime rather than the subprime, won't get loans from conventional high street banks, but actually they are quite able and prepared to pay back small loans if the person lending understands the challenges and, you know, sets out a reasonable fee. I mean, if you're paying 11% rather than 617%, it's a lot easier to pay it back. And it's a lot easier then to build up a credit rating whereby you will then be credit worthy from high street banks. So we need to move people, not just to help them in the immediate setting of needing a one-off £300 or £400, to actually being able to borrow that at a reasonable rate, build up a better credit score, and so they are almost like rehabilitated within our high street banking system. For some people that will never be possible, and therefore I do think that banks bear a responsibility for having that, you know, that social wing, and there is a massive role for CDFIs and credit unions in this. I would like to see far more community-based banking that really understands the specific needs of individual communities. And that's probably my sixpenny worth.
Thank you. I mean, I think one of the keen insights is that in many instances, when we're talking about people who are borrowing for credit, often one of the first times they're trying to do so, they're borrowing for something they need, not something that they want. It's not a sort of revolving item. And last and not least, David, let's go to you.
I just want to look at the big picture on this, with the and why this is so important for next year's election, actually, because I don't think, you know, we've had some wonderful suggestions here, but I'm not sure if our big parties are really getting into the nitty-gritty of this. And I realise you've had lots of stats thrown in. I'm going to give you one stat. We get polling at the Express obviously from Britain, from the US, and from France. And there is one figure that is consistent throughout. When asked what the top issue is for the next election, 60% in all three countries will say the cost of living. And that tells you that 60%, that tells you that this is not just about people on low incomes or no incomes. This is about people on middle incomes. I mean, that phrase, the squeezed middle, which was quite popular a few years ago, is probably truer now than it has been since 2008, I would say. And, you know, and this is why this issue really is absolutely essential for the parties to address if they want to win power, because people are struggling. Now, my editors over the years will always say, put a human face on this. What's the human in the story? And I'll give you 3 examples. I'll start off with a middle income example. Some friends of mine who run a small business for regular income, but are currently having to live in a camper van because they can't afford rent, and their mortgage was cancelled at the last minute, which is, I find absolutely extraordinary. And if people on their income level are in that sort of trouble, it worries me greatly for those on lower incomes. I look at, I live in Barking and Dagenham, which is I think still the poorest borough in London. In my street there are probably 3 or 4 multi-occupancy houses. Those are houses with 20 to 30 people living in them. I think about walking out of my house a couple of months ago to walk the dog in the evening and finding a man beaten up in the middle of the street, precisely because he was desperate and had gone to one of these money lenders and was unable to pay it back. Unfortunately, not a rare occurrence in my part of London. I mean, I think of a story a colleague of mine told me last week. He was in a supermarket. There was a young woman with a child, just with a shopping basket, and came to pay with her credit card, and it was refused, and started taking items off until she could get the credit card to work. And the guy actually offered to pay for her. She says, no, you know, I've got to live within my means. And she said, the trouble is that life now is about what I can't have rather than what I can have. And this is, of course, these are the things which drive people to, you know, look for loans, to get credit. And I suppose I'll just finish with one thing. And I mentioned 2008 because obviously that was the big crash. I don't think we've ever really properly recovered from that. Certainly I started in Westminster in 2010. And the entire story of Westminster, including things like Brexit and all the rest of it, I think, has been shaped by what happened in 2008. But one of the least talked about aspects of it is the closure of availability of credit. There was a kind of nervous breakdown in the political class and in the banking class. You know, we've seen it in mortgages, but we see it in all sorts of other areas. And you know, those payday loan issues were a result of that. And you know, now these, you know, kind of going to cowboy money lenders is a result of that, because people are desperate. And if this issue is not resolved, then you know, the main parties, the current governing party, but also the Labour Party, I think will have failed.
Thank you. So while I'll give everyone a brief moment to sort of think of questions and abuse my position as chair to ask the first one, it's actually on that cost of credit point, because I think this is probably something that isn't going to get easier. Interest rates are higher. If you lend money, you need to buy money in order to lend it. And the institutions most obvious who have fair amounts of money to lend, it's in their sort of business trade, is the banks. And so I guess the question, of which I'll come to the whole panel, is where are the banks in all of this? How do you see them contributing to solving this issue? Because currently it feels as if they're interested in their sort of in the prime customers, but less interested in the customers outside of that. Why don't I start with you, Sasha?
Well, I think probably the first thing to say is that, you know, when we look at the number of people, and I absolutely agree with David, this isn't a niche issue anymore.
No,
there are
not.
I think it's 3.5 million people who are what we call squeeze and sliding, who were doing okay, who are now really struggling. So, you know, when you look at 17.5 million people, a large majority of them are already customers of big banks. They're just not, you know, as you say, you know, banks effectively withdrew from providing small amounts of unsecured credit to people with poorer credit scores, but actually they don't really provide small amounts of unsecured credit, partly because economically it actually costs the same to do a £5,000 loan as it does to do a £500 loan. It's pretty obvious that the profit margin on the £5,000 loan is going to be more appealing to them. So I think that, you know, for banks there are sort of probably some rational reasons why they don't do it, yeah? Is that, you know, at the moment if you lend to what is deemed to be subprime, you have to hold double the amount of regulatory capital on your balance sheet. Very sensible as a post-2008 financial security measure, but effectively what that means is if you've got it's not profitable to lend, you've got to hold more capital, and there's a reputational challenge around lending to people where the costs are higher, and actually, you know, should I chase that single mum for the money back, that those come together in a perfect storm where it actually makes it very hard for any individual bank CEO to say, right, I'm going to step into this space, or even I'm going to provide lending capital into this space. However, I think this is where we really need to think about, you know, really financial services as a utility, yeah? There should be a permission to play in terms of financial services in this country. Banks actually have an underwrite in terms of their you know, each of our bank accounts, yeah, there is a guarantee from the government around what they have. So what is their permission to play around ensuring that even if they're not going to be the lenders, CDFIs, credit unions, both have the referral mechanisms, but also the funding to allow them to thrive. And I think that's one of the things, I'm not sort of specific on which mechanism, but other countries have got mechanisms which effectively say, it's okay if you don't serve it yourself, but please make sure, banks, that you're actually providing the right support and funding so people have got a route to access credit from community organisations that can do so well. And I think that's something that structurally we've got to fix.
Thank you. And let's go along the panel. Joe.
Yeah, so I would agree entirely that maybe high street banks aren't the natural vehicle for risky small loans to subprime customers. But I do think they have a moral responsibility. And, you know, if the motive of banks is purely profit, then, you know, thinking how they had government bailouts not all that long ago, it does seem to me that there is a moral imperative of banks, at the very least, say, to ensure, whether it's through some, I mean, as you say, if banks were a utility, you know, you would have a social tariff,
yeah,
and you know, the equivalent of that, sort of financial social tariff. But you know, banks more and more are withdrawing from the high street, and so you actually need a replacement that is very locally based, that very much understands the communities that they're lending to, and is able to provide that support, both to provide funding, but also to ensure that people are kind of protected in the vulnerability of being able to pay it back, or, you know, their personal circumstances.
I think one of the things we noticed in some of our research is that in many instances, people who are borrowing in the subprime space, you know, they used to borrow with doorstep lenders. Lots of them do not, you know, access the internet. They do not like lots of forms, and so I think the point about banks closing lots of their branches is a particularly good one, because where else do you go? Baroness Emmett?
Yeah, so I mean, I think it's about partnership, isn't it, to be honest, which is sort of what I think we're all really saying is, you know, there's sectors, there's the credit unions, there's the CDFIs who are there and primed and ready to help and are doing some fantastic work and offering credit to people who really need it. As I say, there have been some great partnerships. I mentioned the sort of NatWest initiative with responsible finance. So there are things happening, but I think banks need to take that step a bit further. And as I said, one of the things, I mean, I just know because I'm sort of doing some work with Salad, is they just couldn't get the capital funding from a UK bank at a rate that was commercially viable. So they had to go to the USA. That just seems mad. And they've sort of said if they could get credit or work with banks in the UK, they could bring their APR down by 10%. So there's a real need there. I think strides are being made. I know there's lots of conversations, and I think as the sector's sort of maturing, I guess, banks will hopefully have more confidence as well and can see CDFIs and others doing great work. But I think that partnership has started, but it needs another step forward. And I think, you know, banks really need to up their game a bit in this area.
And finally, David.
Yeah, I was going to make the point about what high street banks, because I haven't seen one for a while. But you know, if anybody sees one, please let me know where it is. But I mean, I take the view that the banks are failing us, and you know, I go back to what I said. I think 2008 is being used as an excuse for that. And I think the government has a role here to ensure that they stop failing us and that they actually start providing the sort of services that people want. I mean, you know, we've just gone through a whole debate about banks trying to close down people's accounts for all sorts of reasons, whether it's political or whether they've got a cash business, for crying out loud. You know, there seems to be a reluctance to actually provide a real service that people want. But I think Joe mentioned it. I mean, we, the taxpayer, own a third of NatWest Bank. We're the biggest shareholder in it. And really the government should be using that muscle to at least be making sure that that bank is providing the sort of service and support that people need, and rethinking how banking is working in this country, because it's failing whether you want an account, whether you need a loan, whether you need support, whether you need a bit of credit. There is nothing that, unless you're got a very good kind of credit rating, there is nothing that our banks are providing that is supporting people.
Thank you. And if anyone has any questions, please do put your hands up, and one of my lovely colleagues will bring the microphone to you. All I will say to begin with is questions, not statements, is preferable. I'm sure you've heard that at least 4 times today. Why don't we go to, I can't see the gentleman behind the camera, Richard, I think, first.
Hi, it's Mark Haslam, Public Affairs at Step Change Debt Charity. We help about 500,000 people every year take action on their problem debts. And big supporters of Fair for All Finance, really welcome the disruptive force that you're playing in the sector. It's needed. We've seen for a long time kind of people either slipping into debt because they're using high cost credit or excluded from the market as a result of the survey showed. And I think one of the things I'm hearing loud and clear from the panel is that there's a role for government here to step in and kind of compel the banks to do something. So I guess my question is, how does that work with the international comparisons that we've got, that Sasha, you might be able to talk more to, and with kind of the job of the regulator now kind of to correct market failure and kind of address these kind of outcomes for vulnerable consumers? Is there a role also for the government to support the FCA here? How can they work together to improve the situation and get to a better position where people who have these needs are served better?
And then can we go to the gentleman over there? We'll take them in pairs, and then we'll...
Seb Ellsworth from Access to the Foundation for Social Investment. We work in the financial inclusion space for community organisations rather than individuals. It's really building on that last question and specifically about disclosures and the experience in the US of the Community Reinvestment Act, whether that is a tool that could provide that compulsion on banks to do much more of what we're talking about. I've asked Jo that question several times already, so she doesn't have to answer it again.
So 2 interesting questions there. One, broadly about what we can do to compel banks, particularly in light of the FCA's consumer duty, its obligation to produce good outcomes, and disclosure and sort of foreign mechanisms that we might have as a comparison to what we might want to do here. Sasha, it sounds like it's probably one for you to begin with.
Yeah, I'll start. So if I start on the market one first, I think it's really interesting. So just as a frame, we have already invested 30 million into community finance organisations. So that is backing plans to potentially double the amount of affordable credit coming from those organisations. The leverage you can achieve in this area is huge. We deployed £5 million during COVID, which preserved about £150 million worth of provision that otherwise could have gone under. So actually, in the context of banks and their balance sheets, relatively small amounts of money can make a massive difference. So that's number one. since we started, we've been trying to get together a debt fund. The idea of, well, actually, if CDFIs and community finance organisations look a little bit too small, not enough track record, could we create a fund that could pool the risk so that banks could put their money into a fund and then that would be managed? They would de-risk it that way and we'd effectively provide for first loss capital. The thing that is missing is that no one wants to it doesn't fit easily into a box. And nobody wants to step forward and be the one that is then putting themselves at potentially a competitive disadvantage to their competitors. So I think this is what's really interesting, is what legislation achieves in many countries is it creates a level playing field. And you can actually create that level playing field by actually not having legislation, by actually, Treasury can call banks together and say, right, guys, I would like you all to do this. You've actually given the CEOs of those banks a little bit of air cover of like, we're all in it together and we can do it. So you can achieve stuff without legislation. Other countries, Indonesia, India, Mexico, there are lots of different mechanisms around the world that achieve that same effect. The important thing of that stuff around the world is often you hear about, we don't want UK banks to be uncompetitive. Other countries are already doing this and it's factored into their banking sector. So actually us not addressing this actually just contributes to uncompetitiveness in a different way, because there are a whole load of people who are missing out on stepping stones to being productive in society. FCA, I'll just say shortly on that, I think consumer duty is really good in terms of getting banks to focus on outcomes for customers. However, I think that there is this opportunity to make sure they're also looking at who are the banks serving, because measuring the outcome, frankly, for me and Joe and saying it's lovely for us is all well and good, but if Erica down the street doesn't have a bank account and can't access it, then it's not really helping her. So I think that making sure that there is looking at how is that market functioning to ensure that people across the UK have actually got access to the services to give them the stepping stones to financial inclusion is a really important part to look at.
I mean, I think there's a really interesting point there about good outcomes in terms of whether you actually have a product in the first place. Can you have an outcome? And then can it be good or bad if you do not have the product in the first place? Brandon Evans, what do you think? Do you think power of Treasury or do you think legislation?
Having overseen legislation going through Parliament for 6.5 years, I'm always quite in favour of non-legislative solutions, not least because legislation takes forever to come in. It's normally changed somewhat out of recognition occasionally from what it went in. So actually, I think you can obviously, of course, go to legislation, but it takes forever. And actually, what you want is action now. And we have so much legislation anyway, and yet we're still here talking about issues. So it doesn't necessarily solve everything either. I think it'll be interesting to see what the consumer duty does. I mean, we did have treating customers fair, as long as it doesn't just become another word and people actually really use it to help focus their behaviour, then it may well have an impact. So I would like to see using the tools you already have more effectively than necessarily going down another legislative route, because as I say, it can take a long time, and the fact we're all here talking about this shows that we don't, frameworks legislation doesn't necessarily, it's behaviour that matters, and that's what we really need to focus on.
Thank you. We'll go to David and then Joe, and then we'll take another question.
I agree with you, but I mean, having had to cover so many debates, it's and watch bills being changed out of all recognition. It's like I often feel quite sorry for you actually by the time it gets to the Lords. But anyway, but I think there is an underappreciated space for the threat of legislation to focus minds, because there's nothing that terrifies corporations and banks more than the threat of legislation, and so it shouldn't be taken off the table. It should be the gun lying there really to actually get these people to start restructuring and start. I mean, I agree with the models. I think the American model is particularly interesting. It's interesting to see how that plays out actually. So I think that's the way, perhaps the way forward, and perhaps if the Treasury can kind of start applying that sort of pressure, then we may have some outcomes.
And Joe?
Yeah, so going back to what David said about I haven't seen a bank in my high street recently, we shouldn't even call them high street banks anymore because they have given up on wanting to serve the high street. And I think that the section of the population that is most affected by challenge with credit is often digitally excluded as well. So online banking is not necessarily the answer either. So looking at international comparisons, I know Germany, for instance, has far more regional banks and has invested significantly at the time when we've scaled back any sort of regional activity. So I think that the key has to be, how do we enable more, you know, how do we create a different product, a new generation of local banking? You will all know, I think, that I work closely with Dave Fishwick, and you know, I've said I want a Bank of Dave in Stoke. You know, I'd like to see the equivalent of a Bank of Dave in every community, you know, town, city in the country, because to me this is the working together with CDFIs and credit unions so that you encourage enterprise, you back local people, you give them, you know, it's the hand up, not hand out, and you understand what the specific needs are of your customers rather than computer says no. So I think that it's a significant change, legislation or not. I mean, the challenge is that it would appear that the financial regulator makes it very, very, very difficult to change the model. And if anybody can tell me how to sort that one out, I'd be very grateful.
Any more questions? Should we take one from the gentleman at the back and then one from the lady over there?
Thank you. The panel is... Should I introduce myself?
If you like.
My name is Ganesh Rajendra. I actually work as an institutional investment advisor in the alternative credit space globally. So I deal with US investors, other investors investing in Europe, including the UK. The panel has spoken about trying to find a way to get the banks more financially inclusive. But I think recent history, as well as other countries, has shown that, you know, banks, as Sasha made the point, banks are subject to regulatory capital, they have heavy governance in terms of the risk that they take on. It's probably not going to be a feasible outcome. And I certainly, you know, if I'm investing in banks or as banks being as core as they are to the financial system, to put that banks in that kind of risk. Why isn't the system not looking at non-banks, right? So the comparison to the US was made. The US, consumer credit in the US substantially is funded by non-banks. They're not subject to regulatory capital. The institutional investment or capital markets money that goes into them knows exactly the kind of risk they're taking. But yet, when you look at the UK, non-banks have had a terrible history. For maybe for right reason. Wonga, more recently, Amigo, Providian has shut down its subprime lending. Those are the institutions that are more naturally suited to originating credit to the riskier parts of the economy. But nothing is done to actually encourage and build out that sector in the UK. Should that change?
And the lady over there. Thank you.
Hi, Nicola Sharp-Jeffs, Chief Executive of Surviving Economic Abuse. I would like to say this might be a niche issue, but we do know that 2 in 5 adults would have experienced economic abuse from a current or a former partner. We also know that 60% of those survivors are coerced into debt. So the consumer duty actually is really exciting for us because it looks at foreseeable harm and how the design of products and services could potentially stop partners taking out loans and other credit agreements in their name without them knowing. So one of the things that we're interested in, and I would just be interested in the panel's response to this, is actually can we restore credit ratings? Because what we see for a lot of the victims and survivors that we work with is that that credit rating is not a reflection of their behaviour, it's a reflection of the abuse that they've experienced. And we would actually be able to bring a lot of people out of the situation that they're in if we could restore their credit rating to what it was before they experienced abuse. So just a question for the panel about what they think about that. And just to flag that some banks are doing some great stuff. So Allied Irish Bank certainly has changed the way it looks at credit ratings for survivors of domestic abuse and will lend to them. And certainly, to David's point, TSB are actually doing what the government, I think, should be doing and providing a flea fund for victims and survivors in response to the cost of living. So just want to flag a couple of positive things in terms of, I think, what banks are doing for society as well.
Okay, thank you. Well, why don't we come to you, Baroness Evans, on the credit score part?
Yeah, I mean, I certainly think credit scores are a significant issue in this whole space. And as I said, with new technology and much more openness around being able to access information, sort of some of the credit schools haven't really kept up with that. It's sort of so old school. You kind of think, why? So I definitely think that is an area, to be honest, that really does need looking at. And as I sort of set out in some of my remarks, there may be specific issues around victims of domestic abuse, but actually tackling the credit invisibles. I mean, as Sasha said, actually a lot of CDFIs who are lending to people who have no credit scores, actually they can afford credit if you give them the right amount, if you help them, and if you provide them a service. They don't mean that they're going to have lots of debts and sort of not be able to pay it back. And it's just, we just don't seem to sort of be willing to really look into that properly and tackle it in a way that we should. So I certainly personally think that credit scores are something that really should be tackled. And it's not, again, you don't necessarily need legislation for that. If you came together and you looked at this area, I do think that would make a really big difference to not everybody, don't get me wrong, but it would make a difference to a lot of people who are financially vulnerable and struggle to get credit.
And is there anyone on the panel who wants to come in on the high cost credit market?
Okay.
Yeah, Sasha?
Yeah, I'm happy to come in because I think that you make a really great point. There are over 60 providers in that space who've gone under in the last 3 years. And so, one of the things that we're trying to do is actually really demonstrate what is the sustainable model by which non-bank lenders can operate in a way that is actually sustainable whilst also lending responsibly, because that was the challenge that we found in the non-bank lending market in the UK, was that they, in pursuit of profit, that actually it was treading into a line that was actually causing significant harm to a lot of people. So I'll really just say that out there. If there's anyone sitting in the audience thinking, well, I'm going to set up an organisation that would actually focus on supporting this customer group, then we would be absolutely delighted. I would say that we have experienced, and I'm sure, Baroness Evans, you'll have seen it, that we have seen a lot of investors on all levels working with any organisations providing any type of financial services, that often they are actually writing in covenants to say you may not serve more than X of these types of customers. So we are seeing some of that, from an investment perspective, that risk management, but actually by design, actually excluding massive chunks of people from the system. And I think, again, that's something you have to fix and create, look at the underlying dynamics of what actually creates that certainty. Just also to be clear for me, I'm not saying that banks should necessarily be providing these services, but banks jolly well could be funding, for example, a salad for their expansion finance. They did fund the Wongas, etc., etc. So it's not like they haven't got track record in providing lending capital into those areas. It's just a lot of them aren't doing it right now. Two small organisations they feel haven't necessarily got a track record. We think we can help them to do that and to do it well.
Thank you. And I'm conscious of everyone's time as we draw to a close. What I'll do is I'll go across the panel one last time for broad closing remarks. So David, why don't we start with you?
Yeah, I just very briefly, actually, I was just struck what Natalie just said about the credit rating issue, because I do think this, I just want to reiterate, I do think this is actually one of the key issue, because it's become it's so opaque. There's so having been through, somebody who's been through kind of surprise kind of credit rating rejections in the past, and there seems to be no logical reason for it. In fact, the last credit rating rejection I had, it was some years ago, but was when I actually had no debt, which was always surprised me. So, and it does seem to be a mechanism really more intended for exclusion rather than inclusion, rather than working ways in. And if there's one thing that you know, perhaps the government could tackle early on, to really make a priority. I would say it was that mechanism, so at least people understand what it's all about.
Thank you. Baroness Evan?
Yeah, I mean, as I said, I think this is an incredibly important issue, and I think, as David said, it's something that all the parties need to be focusing on, and actually it's probably an issue where you could have quite close political alignment in terms of wanting to tackle it. It's sort of, it feels like it's one of those things that actually sensible proposals can probably have support across the political spectrum. And as I say, I think as the CDFI sector is maturing, we just need to get the voice out. There's great organisations like Fair for All Responsible Finance, but it's banging that drum and raising this issue, I think, up the agenda. I mean, the cost of living crisis obviously is bringing it more into stark contrast, and I guess using it to make sure that this kind of message and what we've been talking about today gets a wider audience.
Thank you. Joe?
Yes, I mean, so the cost of living crisis has meant that more and more people will be finding themselves in a state where the bank says no. And, you know, so this is a social issue, it's not a banking issue. And I think that governments of all colours will have to address it, but hopefully it feels to me as though there's quite a lot of momentum in the room. I use that with a small m, and you know, and I'm sure we have the capability to find those solutions, but we need to actually increase the pace of change.
And finally, Sasha.
Yeah, it's a really great to get some really sort of alignment around some of the issues. It's really easy when you're talking about financial inclusion and capability for people to go to, but we just need to educate people to budget better, etc., etc. But actually, if people haven't got access to vital stepping stones to actually take control of their own financial future, then we fail a whole load of people from really playing their part in society. We're here, and we're fortunate to be funded to be able to make some difference. If we can actually, if anybody in here has got connections or things that they think they could step forward and actually work with us to actually really get some welly behind it, then it could unlock a whole load of people to really play their part in society, and I think that's worth fighting for.
Absolutely. And with that, I want to be conscious of everyone's time and draw this panel to a close. Can we give a round of applause to all our speakers? And thank you very much for joining us. We'll be hosting a couple more panels throughout the day and some more tomorrow. And so I hope to see some of you again soon. Thank you.